Hello, everyone. We're live, it looks like. Let me know if you can hear me. So we're going to talk about, part of the live stream is we're going to look at financial regulators and something that has come out, a slip up by the SEC. We're also going to have Clive. Clive is going to come on as well today. So that will be interesting. And I want to focus on doing more Q&A because a lot of times it's difficult for me to keep track in the comment section of my regular videos, all the questions. So I really recommend that you come on the live stream if you can, if you have questions to ask. And you can, not only ask me, but also ask Clive, which I think is a good deal, to be honest. So let's have a look here. Yeah, the title of the live stream today is Are Financial Regulators Worried About an Imminent Crisis? So that's what we're going to look at. And before we start, just wanted to let people know, people who are watching this recorded, that I usually come on a little earlier than scheduled. So if you want to, if you want to skip forward about 7, 8 minutes, that's when we'll start proper. Right now, I'm going to say hello to everyone. Cozy Fantuta is here. Darren Smith, Manic Miner, Leo Singh says hi, Mario. Darren Smith, Dilwyn Roberts from Wales. Justin Taylor says evening, Mario. Yeah, Rudy's here. He's doing well. Quadman 72 says good evening, Mario and Rudolph. Yeah, that's Rudy's real name. Ken's duo Rudolph, and that was his pedigree name because he was born on the 1st of December. So we decided to keep the name. So we call him Rudy. There you go. Andrew Bevins here from South Wales. Niels Hun Dynasty, MW351, Gold 13 Dragon, RJ McShane, Honor Camp, John Lord says, good evening, Mario. Good morning, afternoon, evening, everyone. Hope everyone's keeping stacking. Yes, that is important. Yes, I'm afraid a lot of people are going to miss the boat because they keep waiting for a correction. Jiddu the voice says, hello, Mario and Rudy and all the others. Dutch Libertarian, long live Pablo Pina, Mark with Darren Smith. Warren Hunting says, hi, Mario from Chicago. Busman from Miami. Chris Snow. Nick Greek is here. Ewan Roberts from Lancashire. Christine Massot. Yes, everything's well. Thank you, Christine. I hope you're doing well too. Free speech taken, Michigan. Gur Olgi from Norway. Yeah, Gur Olgi is an old follower of the channel. Andrew Adams says, keep up the great work. Oh, thank you, Andrew. It's nice to get feedback like that. Free speech taken. Michigan says, hello, Mario. Hello, Michigan. Nick the Greek from Wentworth golf course, I suppose. I did watch the golf today on online. The Sky. I've got Now TV. It's not real TV, but that was a good tournament, the PGA Championship. Richard Pickering says, good evening, all. Belly Dance Rabies here. Qualude Charlie. Hello, Marion Rudy from St. Louis, Missouri. Okay. Great. Sylvie from New Jersey. Chris Tippin says we love you. Mary, you're a good egg. Thank you. Peter from Yorkshire. My wife and I went to Yorkshire last summer. It was nice. We had a good time in Yorkshire. Ken Newhouse. Hi, Ken. Michael Kennedy. James Keister. Keister Beach or Keister Beach. The depreciating pound, yeah, but actually the pound has been performing better than the dollar and the euro this year because the pound is down 21% versus gold. Gold, the dollar is down 27, and the euro is down 25. So uh, I suspect that's going to change. It's just a temporary strength. Cody Mitchell says, I just learned about coin of the realm here in the US. So are the generic coins I've been stacking not as valuable? Not necessarily, as long as the weight of gold and silver is really what matters. But I don't know the tax um, situation in the US with the gold and silver coins. I know that in the UK, coins of the realm, they do not incur capital gains tax, but I think it's different in the US. Ronald Wilson from York, South Carolina. Lorraine Dilks from New Zealand. Yes, Hannah. Yeah, we did have a nice weekend. Thank you. A fantastic weekend, and I hope you did too. Janet Yellen, please, will you all just keep paying me? Zabinator, Boom, Alaka Blam Ray. Not sure what that means. uh, Deal with Roberts, no crisis, Mario, just more money printing. Well, it could evolve into a crisis if the currencies drop too fast. You never know. Different states have different rules. Yeah, I guess you're talking about the coins of the realm. David West, if precious metals rigging is illegal, why is no one prosecuted? Well, because the government is involved. The government and the central banks do it because they want to artificially keep their currencies inflated. So that's why no one gets punished. You know, they do punish a few traders once in a while, but they're not going to punish the Bank of England or the Federal Reserve, unfortunately. So Clive is coming on here. Let's Pat laughter. Mara, hope you're well and taking it easy. No, I'm really well. I mean, I'm feeling a lot better after my heart surgery in April, and my golf is improving a lot. My handicap has dropped 25%. I'm back down to 8, which is good. So it did make a difference. Hi, Clive. How are you?
Hey, good evening, Mario. How are you?
I'm all right. Yeah, yeah. And
What's our topic for the evening?
oh, yeah, I mean, we can go over it a little bit. I always have a topic, but I was also telling the viewers that we can do a lot of Q&A because I think that's interesting to do.
Okay, that would be interesting. I've got a later on. I've got a few questions I noted down that people sent to me by
Oh,
LinkedIn, and I did answer them, but I can answer them. I'll repeat the question and answer them again here for you.
great. So yeah, the main topic though is, are financial regulators worried about an imminent crisis? And I mean, I have spoken about the banking crisis we had last year, and that it reminded me a little bit of the subprime crisis because that started rearing its head in early 2007, and it wasn't until 2008 when Lehman collapsed that it culminated. So, um, yeah, I don't think the banking crisis is over. And I was reading, someone sent me this actually. Someone on LinkedIn sent me this article here. SEC slip up hints at fresh financial fears. And it says that last week, the SEC, and this is from September 20th, last week, the SEC accidentally published internal commentary along with a speech by Chairman Gary Gensler. Here's one of the comments which was mistakenly included. So that's the comment here that I'm going to read, Clive. It says, I strongly recommend that a sentence be placed here somewhere in the part of the speech to reassure markets that you are not making the speech because you think there's an imminent crisis. And it says these internal comms were quickly deleted from sec.gov, but not before the page was archived for posterity. The slip up reveals anxiety among regulators over messaging. I try to go into that archive, but that page doesn't exist anymore. But I think the Daily Reckoning is quite credible. But one thing they're talking about here as well, uh, that they could be concerned is this, Clive, and I think we've looked at this before many times. And I actually interviewed John Titus back in February last year before the crisis kicked off, and we were looking at this, and these are unrealized gains or losses of investment securities held to maturity, and also available for sale. And these are published by the FDIC every quarter. And this is what the banks are holding in unrealized gains on securities investments. And what?
So there's perhaps an important point to make about that. The yellow bit, which
Yeah,
is the available for sale, the banks have to book that as a loss. But the held to maturity securities in many countries, I don't know exactly what it is in the USA, but in many countries that and the Federal Reserve does apply this principle. I do know that they don't book it as a loss; they book it as they book it as worth 100%.
yeah, the Fed does. I'm not sure why they allow these are like over 4,000 banks, I think, in the US, maybe a little less, but they allow them to hold it as held to maturity, which I think is not really telling the health of the banking sector. So yeah, I just wanted to put this out there. I think the banks are still a problem, and I think it might be one of the reasons why the Fed cut by 50 basis points because the stock market on Friday, I think the S&P and the Nasdaq closed at all-time highs. House prices are still very elevated. The economy is supposedly still doing well. Yeah, I'm not sure if everything's fine. What's your view on that, Clive?
Well, I think the regulators are being very careful about what words they use. A slight slip up by somebody important like Jerome Powell or Gary Gensler could really crash the markets. It might destroy the dollar. It might destroy the stock market. I mean, at least cause a serious blip in these things. So everything they say has to be very carefully crafted and reviewed by others to make sure there's nothing which could panic the market. But yes, I think they are worried, but I think they've always been worried. Nobody likes to see a sudden lurch in prices in anything, and so they try to keep it even with monetary policy. If it's Jerome Powell and the Federal Reserve, they're trying to keep an even keel with the monetary policy to try and make things keep ticking along. The stock market ideally should keep going up forever. Of course, it doesn't go up forever. We have our crashes from time to time. And likewise, as far as the dollar is concerned, they don't want to see the dollar zooming around up or down because that would make it an unstable currency that nobody would want to own. So, they're always looking for stability and they don't want to say the wrong things. And yes, there's got to be worries when you look at the banking sector because there's still a huge amount of real estate which most likely is not worth anything at all because they haven't got enough tenants to pay the city taxes and they're still paying interest on their mortgage. The question is, as these tenancies come to maturity, what's going to happen? The tenants, I think, will more and more move out and say, we don't need such large space. We don't have to have a place in the center of town anymore. And if we do, we certainly don't need the 5 floors we had before. We only need 2 or 3 because we've got 1/3 of our staff working at home every day, and we've got another 1/3 who are out on business trips or holiday. And we've got this new thing called hot desking, where even if you do come into the office, you can now sit at any desk because we now have paperless offices. And as we have paperless offices, you don't need your own desk, you don't need your own drawers, you just sit at the first available desk. So I think the need for office space is going down rapidly, and that reduces its value. And of course, the banks are holding an awful lot of commercial office space.
Yeah, especially the regional banks. Anyway, someone asked me here if I've been to Shropshire. Well, I've driven through Shropshire when I went to Wales over 10 years ago. It looks very nice. Someone's asking here as well if I'm drunk because they usually listen to me at 1.75 speed. No, I'm not drunk. I'm having coffee. Uh, and Fallout 2511 is saying, what is the problem with putting like 90% in gold? I don't get it. Please explain. I don't think there's a problem putting, personally, I don't have a problem putting 90% of my savings into gold. I mean, Clive has a different view. He's more of a, he trained as a wealth manager and that's what he did. He diversifies more, but I personally think, that's my the way I see it, that I want to have as much gold as possible. Yes, you do need a bit of fiat currency or unsecured loans to banks because you have to use the bank still to pay bills. But and that's how I see it. And I'll let Clive answer this question, and then we're going to look at another article I've seen about how the banks have ripped people off in the last 2.5 years.
Well, I loved your unsecured loans to the banks, Mario. Nice way of putting my bank deposits. So I think everybody should own some gold and probably more than they would have owned 4 or 5 years ago. For many years, I've maintained that a good amount of gold is about somewhere in the range of 6 to 12. Well, I think 12% in precious metals generally is a good amount, and perhaps that should be split 50-50 gold and silver. I believe in diversification. I think equities and real estate through real estate investment trusts should be part of your wealth. Of course, one of the first things everybody should own if they can is their own home. I think that's got to be the first aim for everybody. And beyond that, there's a whole raft of different things you can invest in, which I won't mention all their names, but various types of financial instruments. But one thing you have to remember is that each investment has its unique properties. And the one thing I'd say about gold is that if you have physical gold in your possession, you don't need anybody's permission to get it or to use it. Whereas if you have your money held by a financial institution, whether they're holding stocks and shares or whether they're holding cash or even if they're holding your gold, even if it's in a safety deposit box, you're going to need permission to go into that bank and get it. Now, of course, we all think we're going to get permission. I think that will continue. I have no reason to suppose it won't. But if you want that insurance policy, you need to keep a little bit outside of the system so you can have it if one day you go down to the bank and there's a crisis on and they've shut the doors and say nobody can get in the door.
Yeah, I would add as well, nowadays they can also freeze your account if they don't like what you put on social media. That's the other thing that concerns me. Eugene, thank you for your super chat. There's a question here from Mark with a K. What is a historic debt to GDP ratio for a country when hyperinflation kicks in? Um, I mean, I've read a lot about Germany in the 20s and France in the 1790s. They didn't really keep too much of those statistics. But the thing with hyperinflation and a currency that's like really dropping sharply is that I think that the debt becomes so worthless that it doesn't mean much. But I would say yeah, I mean, it definitely would probably definitely be more than 100%. I think the US debt to GDP right now is 123.4. If you look at the US debt clock, I remember Clive about 2 months ago it was below 140 23. It's 123.4%. So it ticked up a bit. But I can't answer that. I don't know actually. Have you got any idea of that,
Uh,
Clive?
sure, when governments spend too much money, they have two choices. Either they can print the money or they can borrow it. Basically, that's the choice. So if they are printing and therefore causing a lot of hyperinflation, which if they're printing too fast, it means they're not going to be borrowing so much, and therefore the level of debt goes down, and the GDP, because they're printing money and spending it and boosting the economy, the GDP goes up. So the debt to GDP ratio in a hyperinflationary scenario generally goes down because they're inflating away the debt because the economy in GDP terms is going up very fast, but the debt isn't going up fast because they're not borrowing, they're printing. On the other hand, if they try to maintain a sound money policy, and that means they're going to tend to try and borrow to spend, of course, your debt to GDP goes up and up and up until it becomes unsustainable. And then you're forced to print and you go into the hyperinflation later on.
Yeah. Oh, I see that you've got a monkey there with Tigger.
Yes. My little boy thought you might like that.
Yeah, Rudy has a monkey toy. Fluffy toy is a monkey. He likes playing with that, and he ripped it, so I had to like do surgery on him on his back. But anyway, uh, someone, John Knox, is saying 9,500 millionaires have left the UK so far this year, and we're only in September. 4,500 left last year. Tourism and labor have been disasters for the UK. Um, I agree, and the problem is it's not just the UK, and it's no consolation that it's just the UK, but uh, I think we could have a potential for punishing the wealthy by if Kamala Harris wins. I think Trump won't be as punishing to the wealthy, uh, but in Europe as well. I mean, there are countries you can go where they have good deals, tax deals for you, but the people living there itself, like in Italy, France, or Spain, they still pay a lot of tax. And I think what's happening as well, Clive, is that the government and the central banks they inflated such a bubble that everyone, there's so many millionaires and billionaires that they think, well, this is not fair, and we've got to take this wealth from these people and redistribute it. But they don't understand that it was inflated, and a lot of this wealth and value are really mythical, as President Putin said that a couple of years ago, that it's mythical values. And what I think it could do if the UK continues, the new government continues to punish wealthy individuals and other countries, it's actually going to collapse everything, and they're going to have nothing really to tax. That's my view. And I mean, I have people saying, "Oh, you should leave and stuff," but why should I leave? I think it's better to stay and try to uh, fight and also I think there will be a lot of opportunities, especially if you've got uh, a lot of if you stacked gold and silver outside the system. I think it's going to be hard for them to go after that because I think, as Lindsay Williams once said, uh, a lot of these people, the elite, gold and silver are their currency, and they're not going to go after that. So, what do you think, Clive?
Well, first of all, I think you're going to be fine with your gold and silver. I don't think we're going to get a confiscation the way we had in the 1930s in the United States. The reason they confiscated or wanted people to return their gold and silver, or their gold actually, in 1933 was the economy ran on gold. America had bills to pay in gold. It didn't have enough gold, and people were hoarding the gold under their pillows, and it wasn't greasing the wheels of the economy. So that's why they called it in. But today, there's no government which is paying its bills in gold, so they don't need your gold at the moment, at least. So I don't think there's any risk that this will be confiscated. What was the beginning part that you were talking about there, Mario? Before what do I think about the risk? Oh, it was the taxation of people. Yes, that was it.
Yeah.
It's quite. I mean, people are mobile today. They're more mobile than they used to be, thanks to technology. So it's not only the people who choose to leave, but it's also the people who choose where to go or not to arrive. So when you have a country whose taxation is not in line with those of its neighbors, people will tend to drift in the direction away from the country which has the most onerous tax rules. And those who are thinking of somewhere to go probably won't go to the highest taxation country. I don't think anyone has a lot of people don't have a problem paying taxes, and they want to keep it at reasonable levels. But there are some things which are just unacceptable to some people. If I speak personally, I find capital gains tax unacceptable. That's my personal view, and thankfully here in Switzerland we don't have capital gains tax except on property. But I'm sure that there are other people who say I don't care about capital gains tax because I've got a high salary, and to me, high income taxes are unacceptable, and so it goes on. And then, of course, if you have a high amount of wealth, let's say you're one of the American entrepreneurs and you've got billions in shares in Nvidia or whatever in your company, you might say that wealth tax is unfair because you're going to be paying an awful lot of wealth tax on something which is merely quoted on the stock market, and you can't really sell it without crashing the price. So why should you pay tax on something which you haven't yet sold? So it depends on each person's attitude. But at the minute they start to change taxes and make them more onerous than they were before, there will always be some people who don't like it and who will leave, and there will always be some people who say, "I don't like that type of tax, and I won't arrive."
Yeah. Quadman 72, he's from Germany. He said, election today in Brandenburg. Green Party is out under 5%. Uh, Alternative for Deutschland, AFD head to head with SPD. Okay, that's interesting. Clive, I want to switch the topic here a little bit. Someone asked about the the black horse of Revelation. I'm not sure if you're familiar with that Bible passage. I've heard of it, and so I've brought it up here. And it says, black horse, Revelation 6:5-6. When he broke the third seal, I heard the third, because someone said it's similar to hyperinflation. So let's read it. When he broke the third seal, I heard the third living creature saying, "Come." I looked, and behold, a black horse, and he who sat on it had a pair of scales, so balancing, weighing in his hands. And I heard something like a voice in the center of the four living creatures saying, "A quart of wheat for a denarius, 3 quarts of barley for a denarius, but do not damage the oil and the wine." So it says the third horse rides a black horse. The third horseman rides a black horse and is popularly understood to be famine, as the horseman carries a pair of balances or weighing scales indicating the way that bread would have been weighed during a famine. The rider typically is portrayed as an emaciated man. Um, are you familiar with that, Clive? With this?
Absolutely not. And,
No.
so, not at all. I never heard of the black horse.
Yeah, but
But God,
I think the scale represents justice of the system, and I think what he meant by hyperinflation is the black horse of the apocalypse, is that inflation really exposes, apocalypse is the unmasking, and hyperinflation unmasks this system that we've had since 1971, or if you want to say it, even before, since 1930, where money is really not real. So yeah, I think there's something to it, but like you, I'm not too familiar with it.
I saw you put the Daenerys up there. It reminds me of a rather scary incident I had this week. I had bought two silver coins. They're Bavarian coins. They look like that with a lion on the back.
Yeah.
And I took them home from the dealer. And I hadn't seen them before, so I looked them up on the internet, and it said the weight is 20 grams. And I put them on my scale, and it said 12 at 12.5. I thought, that's funny. Have they got them in two different sizes? Or have I got a fake coin? So I ran it through a bunch of tests. I did the magnetic test. That's when you slide it down a magnet. It should go slowly because it's silver. That worked. I gave it a purity test, which is a surface test, where you use a diamond tester for that. It passed. I tested it with the calipers to measure its width, and it was the same size as the coin, which is supposed to be 20 grams. And so I gave it the ping test, and ping test, the way you do a ping test, you hold a coin by the corner there, and you ping it. And if it pings for a second or two, it's probably silver. If it gives you a thud, it's probably an alloy. But it seemed to pass the ping test. But I thought, why is this showing 12.5 grams when it's supposed to be 20 grams? So I put it on I decided to do a specific gravity test. That's when you hold it on a tooth thread, and you dip it in water and see the difference in weight, and then you divide the difference in weight by the weight, and you work out the specific gravity. And if it's I think it's about 10, if it works out at about 10, that difference, it should be silver, and if it's 17, it should be gold, and so on. It passed the specific gravity test, so I couldn't figure out for the life of me
Hmm.
why my scales were only showing 12.5 grams. So I thought, but my scales must be faulty. So I took another set of scales and weighed it, and it said 20 grams at what it's supposed to
Oh,
be. And then I realized the scales I'd accidentally set them to a setting called DWT.
oh,
And I thought, what on earth is DWT?
yeah.
Uh, and DWT is the D stands for denarius. It turns out.
Was a
Uh,
penny weight, isn't it?
That's right. It's a pennyweight. And as I looked into it, this is actually what the weight of a penny was. Uh, a pennyweight was the weight of one penny back in the Middle Ages, and one penny was 1/20th exactly of an ounce in pure silver, exactly 1/20th ounce, and 1/240th of a pound of sterling silver. So back then, you had 240 pennies in the pound, as we did until fairly recently. But those back in the Middle Ages were silver pennies. So for a pound, you could have had 12 ounces worth of silver. That's 200, because don't forget the penny was 1/20th of a pound, 1/20th of an ounce. And there were uh, 20 ounces in the pound. Sorry, there's 12 ounces in the pound, wasn't there? So you could have had 12 ounces of silver for a pound. And today you could only get 0.44%
Yeah.
of an ounce of silver for a pound, which means that value of silver today is 300 times what it was in the Middle Ages, or put it another way, the value of the pound is 300 times less what it was in the
Oh yeah,
Middle
less.
Ages.
Yeah, I mean they've
But
been like manipulating the weights and the names forever, isn't it? Because a pound, yeah, it should be a pound of silver, and there's 240 pennies in a pound of silver, sterling
yeah,
silver.
they changed that all in the Weights and Measures Act of 1848
Yeah.
because the sterling silver, the troy ounce
Mhm.
became an official weight at that time. And interesting enough, the European Union, one of the few exceptions they gave to Britain, well, around the world in their decimalization, they allowed the troy ounce to continue, whereas everything else had to be decimalized.
Yeah, yeah. Uh, this is a sovereign scale. So you've got this is for a sovereign and this is for a half sovereign. So you put it on a table, and if you put the coin here and it touches and stays there, it means it's a sovereign. So this is from I think this is from the 19th century. That's how they used to weigh the sovereigns. So yeah, that I think that's one thing, Clive, people have forgotten that money is a weight of gold or silver. It's not just a number in your bank account or on your iPhone. So
So prior to 1933, in the United States, the dollar was merely a representation of a certain weight of gold because gold was the money. So a dollar represented before 1933 23.22 grains, not grams, grains of gold.
yeah,
But after 1934, when they basically reduced the weight of gold in the dollar, it was only 13.71. So they'd effectively halved the amount of gold in the dollar. So up until then, the dollar was the money, and the gold was the money, and the dollar was just the representation of the money in terms
yeah.
of how many grains the dollar had to contain. But then after 1934, the dollar became the currency, and officially it still held gold of 13.71, but that only lasted until Nixon reneged on it in 1971.
I have a scale here, Clive, that has you can change it to grains. So I'm gonna and I've got here what year is it? 18. This is like a gold dollar, 1853. So it's really tiny. So you said it's 20, how many grains?
Um, so it was 23.22 grains. I'm not
Oh,
sure if that's
I've
pure
got
grains or
scale.
whether it's 90% pure.
This scale, I can change it to grains. Let's have a look. I've got it on grams now. Let's go. Oop, is the battery? Hold on.
So that'll be interesting to see if your dollar coin weighs, if it's before 1933, it should be 23.22 grains, but it depends whether that was a 23.22 grains,
I can't.
90% pure or 100% pure. I'm not sure.
I can't. Oh. Yeah, I don't know how to do it, but anyway, I believe you. I mean, yeah, that's the thing, and I think, Clive, we've been detached from that for so long that the bulk of the people don't understand it, and I think when it happens, then people are gonna start waking up, and hopefully, people are already waking up. I've been trying to wake people up on this channel since 2015, and even before that, before I started my YouTube channel. Even when I worked in the city, I told some of my colleagues, not all of them listened, quite a few did. So there you go. Valerie Price. They're talking about another passage here, Clive, in the Bible, Ezekiel 7:19. They shall cast their silver in the streets, and their gold shall be removed. Their silver and their gold shall not be able to deliver them in the day of the wrath of the Lord. Yeah, it's almost like, oh, the silver and the gold. I think what they mean by that passage is that the money will be so bad that it won't buy anything but they say silver and gold because back then there was no paper money. So I think that's what it might be because I can't see silver and gold not being useful when currencies collapse.
Yeah, one of your listeners here in the comments said that some of the gold coins are made of chocolate, but that's here in Switzerland.
Yeah, yeah, yeah.
We have chocolate gold.
Yeah, I like those. And they also make the little gold bars in chocolate, don't they?
That's right. Yes, the 1 kilo bar, except it's a bit bigger than the pure gold one because to get a kilo of chocolate, it's got to be about that big, whereas a kilo bar is that thin.
Yeah, I'm gonna put my little gold dollar back in the box. Chris Conman, thank you for your super chat. How will precious metals prices be affected with the rollout of a new CBDC? Say gold is at 8,000, silver at 2,200. Well, I personally think, and I think Clive spoke about this last Friday, that the whole move in gold and silver will happen before it will be after a crisis that they bring the CBDC. But I I think it's more important to because if they bring a CBDC, it will be a new currency, so you can't really measure it in like today's dollars. Uh, but the fiat currency or the unsecured loans you have to your bank, they will disappear or you won't be able to use them. But gold and silver will still, I think their purchasing power will be a lot more than they are today. I don't know how much they're going to be valued or what the ratio to the new CBDC will be. What's your view, Clive?
So when the central bank digital currency comes in to start with, it'll be 1-to-1 against the existing money that you have. So it looked like dollars and cents, same thing. But at some point, they'll limit how much you're allowed to have of this. They'll control it and stop you putting your old money into the CBDC. When that happens, your old money is undeployable, and therefore it gradually, or even maybe quickly, becomes worthless. So the price of gold in the old money, the dollars we're using today, or the pounds we're using today, or the euros, will be effectively going to infinity. But in the new currency, because they've restricted how much old currency can be converted to the new one, you will find that there's a lot less of the new currency than there is of the old currency. Therefore, in the new currency, which you haven't been able to convert your old currency into, everything is a lot cheaper. That logically is the case. However, I think gold could well be the exception to that because people will be saying, oh my God, they just cancelled, although they didn't really cancel it, but to all intents and purposes, I can't use my old money. It's become worthless. What if the same thing happens to the new CBDC?
Yeah.
I better not hold it. I better hold something tangible instead. And therefore, the number of people who are going to want to hold gold is going to dramatically increase after that's happened. And therefore, I think that gold is one of the few things which will probably go up in the CBDC. But it certainly, most things will be lower in price. It could be that gold will be lower too. But you can't think, I'll take my old dollars and buy it, or I'll wait until I can buy it cheaper because you won't be able to deploy your old currency the minute they shut the door.
Yeah, you need to get into gold and silver, well, now, or hopefully you've been doing it in the past as well. Dmitry Shmerkovich, thank you for your super chat. Follow-up question to Friday. A what if? Gold becomes so expensive in terms of fiat that it may be worthwhile selling in fiat and buying real assets, or would you wait until CBDC fails? I'll let you answer that first, Clive. And then
Well,
I'll.
I think it depends on everybody's objective. I don't think that I would buy gold personally with a view to making a profit and bailing out. I see it more as a parachute, as a way of preserving your assets that you don't need to spend immediately. But of course, there are those who like to jump in and out of things, and if you can get your timing right, there's a great opportunity to go into gold now and sell it for a lot more fiat down the line. And you'll certainly, in my opinion, be able to get a lot more fiat down the line because the fiat is heading towards zero. But once you got the fiat, what are you now holding? You're holding something which is heading to zero. So
Yeah.
what have you achieved? You've achieved
Yeah.
nothing. So I don't really like that strategy. I don't recommend it. But there are people who say if I bought something at 100 and could sell it for 200, I made a profit, even though the currency is worth half as much. Yeah, go for it if that makes you feel good.
Well, yeah, and Dimitri was asking more getting into hard assets or real assets. I think you can. I mean, you need to maybe compare what the ounce of gold or the gram of gold um, buys in terms of that asset. And that's why I think it's important to keep track of real assets or financial assets in terms of gold. It's going to become more and more important to do so. And I wanted to talk about this actually, Clive, because I've been keeping an eye on the Dow gold ratio, which is a really important ratio. In the past, when we've had resets, like in 1933, 34, uh, at the bottom of the stock market in 1932, the Dow gold ratio went to like 2 to 1. In 1980, it went 1 to 1 at $850 an ounce, and the Dow was a 850. This is a daily chart. Let me put it into weekly so we can go back a bit more. So yeah, this was in 1999. You needed over 44 ounces of gold to buy a Dow. And you can see that that's come off a lot. And then in 2011, it got down to just below 6. And we've seen the stock market outperformed until to 2018, and now it's in a downward trend. And the key support here that I'm watching, Clive, and I think this is important because I think we could see an even bigger move in gold once we break the 16 level, which has been like it looks like really been really good support for like over 3 years, and I think we're very close to breaking that. Uh, what does that mean? Well, I think it could mean that gold accelerates higher quicker than the Dow goes up, or gold doesn't go up that much, but the Dow drops a lot. But I think eventually we're going to 1 to 1. Yeah, and that's how you have to look at gold. So you can pick gold. I've spoken about the average UK nationwide average house price. I think that ratio to gold is going to go back below 100. I think the low in the last since 1953 is around 90 to 1. Yeah, and then you can start thinking, oh, maybe I'm going to sell some of my gold to buy real estate. But then real estate is a real asset. But then you've got the new government saying that they're going to tax people who have second homes and stuff. And so it's difficult right now. And I think the best thing to do is try to hold on to your gold and see how the politics pans out.
Can you, Mary, on that chart, can you just go back, pan out a little bit so it's back to 1999? If we look at the period from 1999 or 2000 until 2011, that was a period when the gold price rose by about 400%, and the S&P 500 went down by about 15%. So we had a decade after the Nasdaq bubble popped from the Nasdaq bubble popped. That was the dot-com bubble. It
Yeah.
popped in March 2020. From then, for the next decade, stocks effectively went down about 15%, and the gold price went up. I think it was something like 380%. Then we had a decade from 2011 to 2020, roughly, when the gold price was effectively doing nothing. In fact, it kind of declined, depends what date you take. And the stock market went up 500%. So we're now at a very elevated level on the stock market once again. And maybe we'll have a decade when stocks go down from here, and maybe I hope, by the way, I hope not. That's not my it's not my scenario, but it could happen. And maybe we'll have a decade when the gold price goes up massively. But either way, I think the gold price is looking at your chart is looking like it's making a move to a lower ratio. That means the gold price goes up,
Yeah.
or the Dow goes down, or a combination of the two.
Yeah, and I would say to Dimitri that, yeah, when if the ratio gets back to here, then you start thinking of getting out of some of your gold into real assets because the Dow represents companies that have real assets, the companies in the stock market. What's interesting, Clive, is prior to the Federal Reserve being created in the 1920s, this ratio, even though it's not very long term, it's only back to 1896, was pretty steady. To me, it seems like with the Fed, things have become much more unhinged. You know, so much for the Fed being, creating a stability. But as we see here, back in 1933, we got down to like around 2 to 1. And then in 1980, we went almost to 1 to 1. So I think we're going to go back to that level. The other thing I wanted to ask you, Clive, and the viewers is a question. What day is it today? It's an important day. Do you know what it is? And I'm
So
asking
it's
you guys.
what's special about the 22nd of September? You tell me.
Let's see if anyone of the viewers know. Well, we'll wait a little bit. Well, it's the autumn or fall equinox today.
Oh,
So that's the day that roughly everywhere in the world, the length of the night and day are the same. And I think it's the day that the sun is over the equator, and that happens in the spring and autumn. And why is it significant? Well, this book here, The Triumph of Gold by Franz Pick, he speculated on the pound back in 1933, and I think it was in September or 1931. That's when the pound was devalued and they came off gold. And his professor said this. Um, That was August 10th, 1931. Pechek sold 1 million pounds short, half to the Czech National Bank and half to Kleinwurz in London. On Yom Kippur, which happened that year at the equinox, on September 21st, 1931, sterling was devalued and Pechek made $1 million. And then this guy, this is the like a friend of his talking about this. He says, why do you mention the equinox? I asked this friend's pick. He said, "Oh, I have a theory about devaluations on the equinox. I published it once in a book." So 2 years ago, the pound dropped like to almost 1 to 1 to the dollar, and it was around the 23rd. So is there a currency crisis right now? Well, I think the fact that gold is shooting up versus the dollar, that's kind of people don't look at that as a currency crisis because they don't see gold as the other side of the dollar, but it is. So I think we could be in for a rocky day or two for the dollar, i.e., I think gold could go even higher. And I'm not sure why these crises happen on the equinox. Do you remember the ERM crisis when the pound that was on around September 22nd, 23rd? So there you go.
yes, our friend Mr. Soros apparently made $1 billion by betting against the pound,
Yeah.
and he was right. The pound plunged by about 30% in a day. Or should we say the Deutschmark rose by that much, depending which way you
Yeah.
look at it. And then of course, about 6 or 7 years ago, we had the Swiss franc, which shot up by 30% in a single day. And back in the 1930s, we had the American dollar, which halved in a single day. Much to the up when that's when they revalued gold, and that was much to the upset of the British, the French, and the Swiss, who all held dollars, which were supposed to be gold, and suddenly those dollars had half as much gold in them.
Yeah. Well, there you go. we were talking earlier, Clive, about taxation, and we also talked about, I said about how the banks have been, in my opinion, really shortchanging depositors, and they've been doing it here in the UK as well. Um, so there's an article, I think it came out today in the FT. Fed's high rates era handed $1 trillion windfall to US banks. So it says here lenders charge more for loans, but kept interest payments to savers down. So what they're saying here, these banks were getting 5.5% from the Fed, but only giving people like an average of 2.2%, and especially the big banks like JP Morgan and Bank of America. And they've done the same thing here. I mean, my NatWest savings account never went above 2%, and we're still at 5%, the Bank of England rate. So I'm not into taxation, but I think if ever a group of business should be taxed and to give back this trillion to the taxpayer, uh, it should be the banks, because in 2008 these banks would have gone under if it wasn't for the taxpayers. So now when rates are raised, you know they really shortchange the taxpayers or the depositors. But I think in Europe they've done a tax to get this back. I think the whole $1 trillion should be taken from the banks. Of course, they're not going to do it because the bankers run the government. So, uh, how do you feel about that, Clive? Because
Well, I used to
I
work in a bank,
wouldn't
but
but I wouldn't
it
mind, Clive, if NatWest, they've their rate of in the saving is about 1.6%. I wouldn't have minded if they had it at 4.5%, the savings, and they're getting five and a quarter from the Bank of England. I would say fine, you're making a bit of a turn, but to give you less than 2%, I think that's taking the Mickey. And because NatWest wouldn't even be around if it wasn't for the taxpayer.
I spent my entire career working for banks, but I was actually working in the wealth management department as opposed to the department which makes a lot of money by taking people's money at 2% and
Yeah,
pay and earning 5 from the government. So I wasn't in that department at
yeah,
all. Had
you
nothing to do
worked
with
in
it.
I guess you worked in a private bank. We're
That's
talking
right.
about commercial banks. Yeah.
Yeah, so I was in private banking. So our job was rather for those who are wealthy enough to take their money and try and maximize the interest rate. So there's no way, if we go back to the old era where we had those high rates of interest back in the before 2008, there's no way my clients would have been happy if I'd paid them, let's say, 5.25, where they could have got 5 3/8 from the Federal Reserve. So, our job was to maximize the return for those who wanted fixed deposits. And of course, 1/8% was a significant amount. If you've got a million to deposit, it really is a significant amount. So, uh, as to whether the bank should be taxed on this or not, I don't really have a view. Personally, I'm not going to be investing in banks, and the reason I'm not investing in the banks at the moment is we are going into an era of lower rates. I'm expecting the rates to continue falling, not only in the United States but all around the world for a while. And as that happens, it reduces the profits of the banks, and that doesn't make them a very good investment. But maybe, Mario, as we're just on that, I should just mention with the latest from Jerome Powell reducing the rates by 0.5% and the information that the labour market is nowhere near as robust as they've been making out. And we've got, declines in job openings, unemployment going higher. It basically is signaling a cooler economy and possibly a recession. Maybe we're already in one for all we know, not officially according to the GDP numbers, but according to the labour, it looks like there are less jobs. And then, of course, we've got AI coming in and taking away people's jobs and being part of the application process when people are applying for jobs. So that's being a bit of a challenge for people who are looking for jobs when they're finding they're not dealing with human beings anymore. They're dealing with robots who are going to tell them whether they can have a job or not. So the world is changing quite a lot here. And if you're going to be investing in the stock market, which I think is a valid part of people's investment, the areas to avoid at the moment are the areas which are firstly affected by recession. So you want to be avoiding uh, luxury goods, automobiles, some parts of the manufacturing industry, avoiding all the companies which got very high levels of debt, the companies which got poor cash flow, avoiding financials like the banks, but also the insurance companies, because there's a very funny thing seems to happen when we go into recessions. In recessions, there's an awful lot more fires in businesses. There's an awful lot more thefts or burglaries. There's more cars seem to have accidents or catch fire. So if you're an insurance company, you're going to get more claims at the same time as the interest you're earning on your bank deposits is going down. So again, I think the insurance sector is an area to avoid if you're
Yeah.
investing money at the moment. But on the positive side, I think if you want to hold your own, you want to be in the not the avoid the consumer cyclicals, the other things which go up and down, but what they call the consumer staples. These are things like food, beverages, household items, personal care, the sort of things where the demand isn't really going to change, recession or not, because people spend the same amount on these things. And you could go also extend that to utilities, electricity, healthcare, telecommunications. And maybe another sector which might benefit is to some extent, or some of the REITs, real estate investment trusts, that's property companies, not all of them, but some of them which are in the right type of property, which will benefit from the lower interest rates, therefore increasing the value of the property.
Yeah. Someone said that if you tax the banks, the taxpayer will never see that money. Probably not. And the reason I said it though is because the current system is really corrupt because you have a central bank creating uh, currency out of thin air on the back of the taxpayer to keep the banks whole when they collapse or when they have problems. And then when the system is like working, uh, yeah, nothing's given back to the taxpayer. So yeah, in a perfect world, we wouldn't have central banks and banks would compete and they would pay as much as possible in interest. And also in the perfect world, I mean, Clive, I think in the 19th century, only the very wealthy had a bank account because, if you had silver coins and gold coins, why did you, and you didn't have that much, you didn't have you didn't need a bank. But I personally think banking today is more about control than actually real money. And that's why I try to keep as little as possible in the banks because they don't deposit. There's no money in the banks these days.
You're right, Mario. When I started work in 1975, almost nobody had a bank account. It was the preserve of the rich. Now, I did get a bank account because I started working in a bank and they kind of gave you one. I mean, not immediately. You had to have your sort of 6 months or 9 months probation before you were allowed to have a bank account. But I recollect that after me working for a year, I went across the road and applied for a Barclay card. Um, I was working for Lloyd's at the time. And my manager, a few days later, called me into the office and said, Mr. Thompson, I understand you've applied for a Barclay card. And I said, yes. He said, you know that's not allowed. I said, why not? He said, you're a bank employee. You're not allowed to borrow money. I said, I wasn't going to borrow. But anyway, the bottom line was I was prohibited by the rules of the bank from having a credit card back in 1975.
Yeah,
But certainly nobody. Everyone had people who did save money. They had what's called building society accounts,
yeah,
and the idea back then it was much more robust than today. If you wanted to borrow money for a mortgage, you had to have at least 3 years track record of saving money, and you had to have saved a fixed amount every month for the last 3 years. And only if you'd done that would they lend you an amount which corresponded to what you've been saving, i.e., what you could afford to finance based on what you've been saving for a 3 year track record. These days, that's all gone out the door.
yeah. No, I know. Uh, Someone saying, "What's with the ads?" I didn't know that YouTube was playing ads in the middle of the live stream. I'll have to check that. Uh, oh yeah, there's a question here. Clive Mario, is a balance sheet recession coming to the West? Well, I personally think we've been in a depression since 2008, and the only reason it doesn't show up is because of all the deficit spending that is added on as government spending to GDP. But if you take that aside, what do you? I'm not sure what he means. What's a balance sheet recession, Clive? You might know better than I do.
It was confusing me when he said balance sheet recession. I'm thinking of companies and their balance sheets, and of course, in a recession, the only the well, let's say the fittest companies will survive, but the weakest companies, those with weak balance sheets, tend to fail because in a recession, their sales will go down, and it becomes much harder to service their debts. So that's something I'd definitely be looking at if anyone's got equity investments. Take a close look at the cash flow versus earnings. So is that cash flow really, are those earnings really cash? Because don't forget, the earnings and cash flow are two completely different things. You can have a lot of earnings by increasing the value of your property,
Yeah.
but that's not cash flow. So
Yeah.
have a look at that. Make sure the companies have got good cash flow, but also you want to have a low debt to equity ratio because those with high debt to equity ratios are more vulnerable in an environment where their sales are going to go down.
Mm. Someone's asking here. Let's see. Oh yeah. Uh, Grant, what is the unit that Enbridge is using? So the unit, well, he retracted that message, but I can answer it. The unit is like this system that monetary system that the Brics are trying to build, and it's basically the unit will be 40% backed by gold. So let's say you're one of the BRICS countries, your currency, well, your currency will make up, or your reserves of other fiat currencies will make up 60% of the balance sheet, let's say, of the central bank, and the other 40% will be gold. And that will be called a unit. So instead of holding treasuries, they're going to hold gold and other fiat currencies, and they're going to try to deal with each other in their own fiat currencies. And uh, my understanding, Clive, is when they either have a surplus or a deficit at the end of the year with another country, they might want to pay in some other currencies, or they might just transfer the gold. So that's what the unit is. It's not, they're not trying to build a BRICS single currency, because that, I think that's almost impossible. And if they do decide to do that, it will take too long. I think they've learned that probably the best thing to do is to have like a 19th century, early 20th century style gold standard.
Well, all I can say is that sounds like a bit of a fudge to me when you've got a mixture of different things. It's either is to be a proper currency, it's either gold or it's fiat, one or the other. I mean, obviously fiat's
Yeah.
not the proper currency. Uh, when you have a fudge like that, who's gonna? It sounds a bit like the SDR. I mean, who do you know, Mario, who's ever taken their pounds along to the bank and said, "I'll have some SDRs, please, some special drawing rights."
Yeah.
I mean, they exist and they're partial. I think they're partially gold, but nobody can change their money into SDRs.
Yeah, I think, during the gold standard, I read that the British and they had the reserve currency kept. The gold reserves were about 33%. So I think that's fine. But under this BRIC system, I don't think people living in these countries will be able to take their currency and get gold coins. But yeah, 40% backing could be okay, but we'll have to see. But
I mean, if they want to do it properly, it should be 100% back to that's it.
oh yeah, I agree. But be as it may, I think it's still impacting the dollar, because instead of holding treasuries, they're holding their own currencies and gold. Anyway, let's see if there. any more questions?
I've got a question from. Shall I read out a question I got from
Sure.
somebody on LinkedIn after our last broadcast? It was a guy called John, and he said, if the government restricts how many central bank digital currencies, CBDCs, you could hold, how will I be able to sell my gold after there's been a reset? Well, my answer to John is I don't really think there's a problem with that because for two reasons. First of all, anything you sell will go into your CBDC wallet. So you won't be allowed to exceed whatever the official limit of CBDCs is in your wallet, no matter what you sell, unless you get special permission for under certain circumstances. So gold will fall into the same thing as if you're trying to sell some shares or if you're going to sell firewood. It doesn't really matter what you're selling. It's going to have to go into your CBDC wallet because you won't be allowed down the line to sell for anything else. So, and of course, they will know that you've sold the gold if it happens. But there's no question, I think, of gold becoming illegal, or they're saying that you're not allowed to do it, because the reason they made gold illegal to be held by Americans back in the 1930s was because simply the government didn't have enough gold to pay its bills. And the only way it could get its hands on gold was to stop everybody else earning it so it could pay the bills in gold. But that's not the case today. No government's paying its bills in gold today. And therefore, I don't think there's going to be any restriction or confiscation of your gold after we've had a currency reset. It'll be just like anything else you hold. So you could be holding tools, or you could be holding luxury handbags, whatever it is, you'll still be able to buy and sell it.
Yeah, one of the reasons the U.S. government didn't have gold was because they issued these Liberty bonds in 1918, and they had a 15-year maturity, and they were all gold backed. I think it was like $6 billion, and they were coming due in 1933. So they actually really shortchanged during World War One, 1918, just before the end of World War One. They said, "Oh, we have to be patriotic and buy these Liberty bonds," and they were payable in gold. And in 1933, when they banned gold ownership, and they also canceled all the contracts that were related to gold, so they really shortchanged the public. The public that was, and they used this trading with the enemy act that was passed during World War One to punish the supposed patriots. That's why I never trust government bonds because yeah, they they play with your emotions. They say, "Oh, it's a crisis. You got to be a patriot. You got to," and then they screw you 15 years later. Anyway, uh, Viv B says
And
pre. Yeah.
I was going to say the Trading with the Enemy Act and supplying weapons of mass destruction are rules which have been applied to all kinds of things by the Americans to
Yeah.
justify their getting at people they don't like.
Well, here too, I think someone was arrested here, a journalist. He was coming back to the UK, and they arrested him under the Terrorism Act. So they used that a lot. Um, Clive, we've gone, yeah, time goes by when you're having fun. We've gone over, it's past 10 o'clock. So do you want to tell the viewers how, if we got new people, how they can get in touch with you before we wrap up?
So anyone who'd like to get in touch with me can write to me on LinkedIn. It's the only place I reply. I don't reply on WhatsApp or Instagram or even email. So you're welcome to get in touch with me. If you have a sensible question, I'll be very happy to try and answer it. I had about 8 or 9 questions last week, and I think I've answered them all. But if I didn't, you can get in touch with me again. But that's basically LinkedIn is the way to go. Clive Thompson's the name.
Yeah, oh, there's just one more question here, Clive. Are the Swiss going to nationalize the vaults? I don't think so. I don't think
No, no.
there's no
Last country in the world to do it.
Yeah, I agree as well. And someone else here, Silvershire, what do you or Clive believe the true available gold to silver ratio should be at today? At today, well, it's around 83, but I think the true should be 15 to 1 because that's what it has been for millennia, roughly around 10 to 15 to 1. That's how I see it.
I think we're heading in that direction. In other words, silver rises in price faster than gold, I think, in the years to come. And that will be driven by the demand from the electronics industry.
Yeah. All right. Great, Clive. Thank you for coming on the live stream again. And I'd like to thank also the viewers for being here. And if you haven't subscribed yet to the channel, make sure you do. And we'll talk tomorrow and see what gold and silver are doing. I think that,
Just
yeah,
maybe can I add one thing? I'd just like to say
sure.
thank you to so many of your viewers who have
Yeah.
written nice complimentary comments under your videos when I've been on. And it's that kind of nice comment which encourages me to come back and share
Oh,
my information and knowledge with others for free. I don't charge anything to anybody in the world. I have no income whatsoever at the moment.
that's great. And yeah, thank you everyone for the kind words for Clive. And I see a lot of kind words for me as well. And I'd like to thank you as well, the viewers, for that. And hopefully we'll keep giving you the good content. Take care. Bye.
Bye.
All right. Think that went well.